switch it up. We can switch it up. Switch it up like it's about to go up. Break them like internet. Goofies run up. We leave them in the dead.
You say, okay, I have a lot of money, but you have no money unless you take profits.
When the first ever spot ETF was created for gold 10x.
And the only thing I really knew was Bitcoin at the time, so I just invested very heavily into that. Rode it all the way up.
What's up?
My name is Jeff. Even the creators have said it's going to be the predecessor of CBDC.
What that taught me was that I need to be self-sufficient.
A solid DCA investment strategy, and pretend the red sell button doesn't even exist.
We about to go up like.
All right, what's going on? Welcome to the AMA, impromptu AMA session that we decided to have for everyone. So as questions are thought of, go ahead and shoot them into the chat, and we will certainly do our best to answer those questions if you guys have any. Yeah, for the time being, Jay, Nate, appreciate you guys being on. I think Tracker's going to be hopping on here shortly, and any of the other guys that want to hop in. But Jay, how you doing, man? How's everything going? We missed you on Sunday. So what you been up to, bud?
You know, man, same shit, different day. Just working my ass off to throw as much money as I can into this market. But it's been good, man. I had a little family emergency on Sunday, but we got everything taken care of. And, you know, like I said, the rest of the week, it's just been working on my business every single day, right? First one to clock in, last one to clock out. And then when I finally clock out, I get some downtime. I spend it with you guys here. Technically, it's work, right? But it's like, can you really even call it work? We have a lot of fun doing this, so I can't really even call it work, especially since we're making money while doing it. How about you guys, man? How you guys doing?
Nate, what's up, dude?
Hey, man, Jay, I know you missed us a whole lot. You just spending so much time with us on the only time you get off. You just love it, don't you?
No, man. I mean, it sucks when I miss it, right? Because I like being able to build and maintain momentum. So like when I miss a live, it kind of like gets under my skin. But you know, you just kind of got to roll with the punches, right? Emergencies are gonna come up, so you can't be there for all of it. So I make up for it for the day.
Yeah, you got a really good point on that one. Keeping momentum, right? It's kind of like a little bit. I actually kind of ran into a little bit of that when I was first doing a little bit of crypto, right? I was like, every single day I'm looking at the charts and I'm trying to do some kind of charting, right? And I was starting to kind of get it, although it was getting boring because I was like, okay, so it's not changing as much because this was back, you know, like bottom of the bear, right? So it was mostly just kind of crabbing along. It's kind of like whatever, right? But then all of a sudden we hit, what was it, February, March, that area, and things started like shooting up, right? And the craziest thing about that was I was like, I was starting to get bored right around in January. I was like, yeah, okay, the markets are the same. And all of a sudden things start shooting up. And I kind of lost that momentum of just continually doing things. And so what ended up happening was I ended up actually making a little bit of a mistake. I actually ended up making a little bit of a mistake where I saw the pumps, I sold, and then it kept pumping. And I was like, oh, wait. Oh no, and I bought back very quickly. So I made a very small loss there, but I bought back in quick enough, realizing the mistake that I had made, where I kept going up, and I eventually kind of like made out with something, right? But that was a very close one. That was a very close one. It's because of that momentum, the shift that I had completely messed up.
My man Brendan. Looks like he just came from the gym. How you doing, buddy?
What's up, buddy?
That's exactly what it looks like.
You know, cut some things short so I could join in.
Dude, I like
appreciate it.
I'm gonna bring him Niall's comment here again, man. He said roundtable divergence on the RSI.
Right.
Hey, I will
That's
say,
right.
I'm like Niles is doing his charting, man. So I appreciate it. I'm pretty sure that he noticed that we do have a little bit of bearish divergence on Bitcoin's chart forming, but it's like with what Bitcoin's been doing over the past few weeks. What I learned actually from Josh during the last live stream where I was just kind of spectating, he made a really good point that even though we're kind of down from that 31,500 top, right? We're not down too far, right? We're like maybe like 5% down versus where we were when we started the cycle, right? Our cycle low. And so I was thinking to myself, even though Bitcoin is crabbing sideways, we're closer to the top than we are to the bottom. And so all we need is a little bit of bullishness, a little bit of good positive news. And I think we head up during the latter half of this cycle. So I think the RSI coming down is actually good, giving the RSI a little bit of time to reset. So that we have a little bit more wiggle room when we do finally start heading back up again. But you know, I'm more optimistic than most in the market. So
yeah, I mean, I think the market looks pretty bullish, but there's still that macro background of, you know, war in Russia and Ukraine, you know, still potential. We don't know what happens with presidents of the United States, which way crypto goes. But I'd say if you asked us a month ago, there was a lot worse news on the crypto front than currently, right? A month ago, what happened? SEC, or maybe 2 months ago, whatever it was, SEC tells Coinbase they're taking them to court. They say that Cardano and Matic and all of these altcoins are securities. And now they get handed last week a big loss to XRP, right? A big L. And BlackRock and all of these people that are applying for spot ETFs, who do they choose as their custodian? They choose Coinbase, who the SEC has a lawsuit against. So the SEC is looking like the biggest loser in this past month, as crypto has looked like the biggest gainer.
Gary's gonna have to carry that scarlet letter, bro.
Yeah, but you know what though? They're just gonna pin it on him, and then they're gonna say, "Oh, we didn't have anything to do this. That was Gary." Right? And then that's how they're going to try to usurp control back.
Yeah. But I mean, can you really even call him a scapegoat, man? I don't think so. I think at this
point, I don't know.
Yeah, Gary deserves all the heat that he can get. Did you guys see that I think it was on his Twitter. I saw it from Watcher Guru. He was like, "I'm disappointed that the judge ruled in XRP's favor." I'm like, "Well, that's too bad for you, but he sucks to suck." Because that was, you know, like, I'm happy for the XRP army, right? I'm not a holder, but that was more than a win for the XRP army, man. That was a win for the cryptocurrency market as a whole. Because if there was a candidate to be considered the security out of all of the assets, right? I think XRP and tokens like it, probably one of the front runners, right? And the fact that the judge ruled for XRP in that case, it, like, again, right? It's not case law yet, but it does set a precedent, right? And depending on how the deliberations kind of play out, the lawsuits against Coinbase and Binance, they could just have that dismissed.
Yeah,
right? And we're up from there. Like, that's, especially for Ethereum, bro. Oh my goodness, man.
I really think that this whole win is probably one of the greatest things that we could possibly have had it's when you get big money in, like, starting to come in, and it doesn't matter if cryptocurrency or any kind of market ever, right? If you want money to flow into a market, big money is always going to be scared to throw a lot of their big money, right?
Yeah.
So what's the number one way you get money in? Make it as secure as possible. Cryptocurrency has always been the, like, most scary asset that's out there. You get extreme gains and extreme risk, but as soon as you make it, like, kind of safer, that big money is coming in, and it's going to be explosive.
Yeah, you know what's interesting, and I don't know. Did anybody read what Senator Torres wrote to Gary Gensler at the SEC after the judge's
cease and desist?
Essentially he is. But there's one part of the judge's ruling that I thought was really interesting. And, if the SEC decides that they're going to, elevate this to the next level of court and see if they can win that way, one of the big things that the judge said, Judge Torres, was by emphasizing the need to prove the presence of an investment contract, right? So if judge is saying you need an investment contract to be able to be considered a security, then I don't know how crypto is ever going to be put into that category. And like I said a few shows ago, there's 3 potential outcomes that can come with regulation, right? It gets thrown into the security box, which is terrible for innovation, terrible for the United States and their growth in the market, and being a world leader from an economic standpoint, because all those projects would end up going elsewhere. 2, it falls under some other types of commodity, right? Like they're kind of saying Bitcoin is. Or 3, maybe we get its own little regulation at some point, and crypto has its sort of unique niche within the economic market, which personally I think it needs.
Yeah, for sure. That's actually a pretty damn good point. When the news first kind of hit the fan, it was kind of so the SEC kind of made it fairly clear that they were most likely going to try and pursue it into the second Court of Appeals, right? And like you mentioned, if they lose that, then it becomes kind of legal precedent,
yep.
Right? And I don't. In order for anything to be considered a security, it has to pass the Howey test. And like you said, in order for you to pass a Howey test, there has to be an investment contract made, right? And I think that's probably the reason why Ripple as a company, they were found guilty in a few of the counts that were levied against them, right? Probably precisely because of that, because some of the early, I guess the ICOs, right? There was some investment contracts or something along those lines. But for every other single asset out there, right? It's like you go on an exchange, you buy it. I'm not signing any contract with anybody, right? I'm not even signing a contract with Coinbase. I just want to be able to buy the asset that I want. And so if I'm not signing a contract, and you could do a case study yourself, right? You could do a little thought experiment. How many of these people, like how many customers do you know, even you personally, right? When you go and buy when you go buy an asset on an exchange, or even out there on DeFi on a decentralized exchange, you're not signing anything aside from them signing approval requests, right? It's like, well, that's about it as far as contracts. I'm not there isn't any other party involved besides myself and whoever is willing to, like, the exchange that's selling me the coin, right? But the exchange is not, there's no contract on the exchange saying that we promise you if you buy this from us, that we promise that this asset is going to appreciate over time.
And not only that, but we're not really buying it from the exchange. They're just an intermediary between whoever wants to sell the coin and whoever wants to buy the coin, right? So it's almost even less of a case that there's cause for, some sort of contract or cause of, security. It just doesn't make sense.
Yeah.
All right, gents. Hey, I'm gonna put a hold on the conversation real quick. We got our first question. We got Miss Cass in the chat. She's got a question for us. So she would like to know how we got into crypto to begin with. Why did it appeal to us, and what made us stick with it? So if it's cool, since our boy Tracker is able to pop on, and he hasn't gotten too much live stream time, just given the nature of what he's got going on, I would love to get him to go first. Tracker, what's going on, buddy? How you been? fill us in on what you've been going on, what you got going on, and then if you could answer Cassie's question.
Yeah, sure. Thanks, guys. Glad to be here. So yeah, after I figured out StreamYard doesn't play nice with certain browsers, I had to switch over and use damn Safari. So I guess that's what I'm doing now. So sorry for being late, guys. But to answer her question, how do I get into crypto? I've been traditionally, trading in and out of traditional markets probably since, I don't know, the 90s, off and on. And I just felt like when I stumbled across it, it was funny. The very first person I ever heard really pushing it as a trader was it was actually on CNBC Fast Money, and it was what was his name? BK, Brian Kelly, which is a traditional trader. He's big time. He's on those shows and stuff. But it was funny. The one thing they went around, they asked everyone, what would be the one asset you'd want to hold on for 10 years? And he was locked in definitively 100%, no questions about it was Bitcoin. I want to say that show was in 2018, 2019, something like that. So he was already had strong conviction to be that hardcore. So got me looking into it a little bit, getting exposed to it. But then I think also just researching over the time, starting to see certain people really starting to break it down and explain it to me, to at least how it was going to change a lot of different thinking in the industry. So getting away and having that, non-bank entity was huge, and it started grabbing traction. You started having these big pumps, you'd hear about it, and then it would fizz out, and then you hear it come back again. So it definitely wasn't going away. So definitely needed me to take notice. And I think along with that, and I think if everything else in the world, if you're not if you take everything on face value, like what you see on TV, what you hear on the mainstream media and all this, I'm not trying to get down a conspiracy path and all that crap. But I'm really trying to do is say, if you're not questioning everything you're hearing and seeing, then you're really going to be, fooled going down the wrong path in life. You've really got to do your own due diligence to understand what you're trying to invest, whether it's investing or knowledge about anything. We have this something called the internet that we've had. That's anything you want to know about at your fingertips. Yes, there's a lot of distractions, and you got to do some extra research to know what's truth versus what's facts or people steering in the wrong direction. But I think if you're using these tools, and crypto is just another financial tool, or to break away from traditional assets, and just studying and learning what the internet has to propose for you, I think it will start to open up your world to a lot of things, such as all the FUD that went on for many years in the industry. Jamie Dimon of JP Morgan, all the big institutional banks, all the big, players around the world, Larry Fink, bad mouthing crypto and calling it a garbage scam coins. And all of a sudden now they've been jumping on, getting involved, and this is what they do. And I think these are the things why I'm saying you can't take things on face value. You got to do your own research. But I guess the long-winded me talking here really comes back to just it intrigued me because it was another opportunity to invest in something that was very new, and there were so many doubters. And I like to take the contrarian way of things. So if everyone's going one way, you need to be thinking like, maybe I need to go the other way. And honestly, that's what a lot of investing is all about. So I know maybe that answers your question or not, but that was my 2 cents.
I swear, Tracker, every time you talk, dude, I got to have a piece of paper and a pen ready to take notes, dude. You are just a wealth of insight. We're so blessed to just be able to have you as part of this. Let's go with Jay. Can you throw your origin story in and what's kept you around in it?
Well, what brought me into crypto in the first place was because when I started my business in this is so hilarious. I started my second business in 2021, right at the peak of Corona. I told myself at that time, I was like, okay, this is really the time where I see the world collapsing around me, or so they say, right? And everything is being shut down. People are getting laid off. I told myself, look, this is one of those times where you have to realize that if this happens again and you lose your 9 to 5, what do you have to fall back on, right? And so that's when I finally decided to start my second business and try and transition myself out of the 9 to 5 into the true entrepreneur, right? And long story short, I was able to succeed in doing that, and I was starting to accumulate a considerable amount of capital. Considerable considering what I was making then. It wasn't a king's ransom or anything like that, but definitely a lot more than what I was making in my 9 to 5. And I was thinking to myself, okay, I'm really getting tired of just seeing this money sit in the bank doing absolutely nothing, right? Because I think all of you can pretty much agree with me that unlike 20 or 30 years ago, it's not really possible to save yourself into wealth anymore, right? I mean, even the highest yield, even banks that offer pretty good returns on your savings account, like what, like 2%, 3%? Like, what are you gonna do with 2%? You can't wipe your ass with 3%, bro. It's and so I was looking for different avenues to park that capital in, right? And then that's when I finally started educating myself about assets and liabilities. And so you kind of fall into this rabbit hole, and one of the first things that pop up is real estate, because that traditionally that's how a lot of people, especially back in 2008 to 2012, when everything kind of crashed, kind of like what happened earlier this decade, right? This is the 2020s. Everybody was getting into real estate and making their money that way. So I looked into real estate, but unfortunately, the barrier of entry for real estate was extremely high. And at that point, I was still trying to rebuild my credit. I didn't have a lot of credit. I didn't have the 20% that I wanted to put down to avoid, PMI and all that stuff. And so I was looking at other different avenues to park my capital in. I was looking into traditional stocks and bonds and all that stuff, IRA, 401k, but nothing really appeared to me, because it was either the barrier of entry was too high or the returns that I wanted was too low in all of those different avenues. And so I was watching Fresh and Fit, and it was on their Money Mondays episode, and Charlie and Miguel happened to be on that stream, and they were talking about cryptocurrency. And Charlie and Miguel from Cultivate Crypto and Dollar Cost Crypto, those two are my mentors, and they're mentors from a lot of the guys here in this chat too. And they made the way that they explained it to me not only made it seem very attractive, because they made it, they explained it to me in a very clear and concise way, and then the barrier of entry was so low, right? You didn't need a lot of capital to start. It was sign up for an exchange, buy the asset you want, and then ride it until the top of the next bull cycle, right? And that's how I initially got into cryptocurrency. And the reason why I really what really drew me into it was, one, the ease of entry, and two, the potential returns that you could make from your investment, right? And for me, that was it in the beginning. I was like, I wanted to make more money, and that was it. And this was the vehicle that would get me to that. It wasn't until I spent the next like 6 months to a year learning about the space that it really made me appreciate exactly. It made me appreciate the industry outside of the returns that I could potentially get, right? Cassie made a very good point in the chat. She said one of her favorite things is that it's kind of far removed from the big banks, right? It's decentralized, right? That's kind of the spirit of cryptocurrency, is that it's decentralized, right? Now, there's no one person who controls all of the Bitcoin. And that's what made me really appreciate it, because as you guys know, there's a lot of big players behind the scenes kind of pulling the strings of the entire world. And I saw this as a vehicle that would allow you to kind of escape that, right? And so as I studied more, the more I realized that this asset class has the potential to really allow us to, quote unquote, escape the matrix, right? Because it allows complete and 100% self-sovereignty that is to a significant degree anonymous, right? They can't, like, here's a funny story for you guys, right? When I was moving funds back and forth between accounts in the beginning to kind of onboard as much capital, right? My bank would have a tendency to kind of like put holds on your funds, or like charge you fees, etc., because you're moving money in between your own damn accounts, right? With crypto, none of that happens, right? Nobody can freeze your assets because they don't like you. Like what happened with Canada with the protesters, right? They can't, like, those guys had their assets frozen, their money frozen on their banks because they didn't like what they were doing. You can't do that with cryptocurrency, right? And so it's complete 100% self-sovereignty. So outside of the significant amount of gains that you're going to make from investing in the right assets, you also get a significant degree of anonymity, and they can't control you. And if that doesn't speak volumes to you, I think, well, eventually it will. Eventually it will, right? Because eventually they're going to have CBDCs out. They're going to have some kind of social credit score out. And sooner or later, people will realize exactly how valuable the self-sovereignty and anonymity that cryptocurrency provides is, right? They're going to realize the value in it. It's just a matter of time. And so I know that was a little bit longer of an answer than probably most people wanted, but that's my story, and I'm going to stick to it.
Hey, Nate, I'm going to pull you in here real quick. Is Pepe a better investment than a 401k? And tell us about your origin story.
Well, I don't know, man. Like Pepe to the moon, 401k to hell. I think I like Pepe better. Hey, man. So, like, it was hilarious as hell because originally I had heard this thing called Bitcoin back in 2017. And I was like, Bitcoin? Yeah, it's a new form of money, right? And I was like, new form of what? And at this time, I had been trying to learn all about investing. I was trying to learn about how to, like, start a business, things like that, right? And so this kind of interested me a little bit because a new form of money, ooh, cool, right? And all that I got out of the several articles that I was reading was it's a form of money that says, fuck you to the government. That's all I need to hear. I was like, fuck yeah, let's go. And then, well, back then it was a little bit more difficult and you had to be tech savvy, computer savvy. And the only type of computing I really knew was PlayStation at the time, right? Because that's all I was really doing was just gaming. So I kind of was just like, this is kind of hard. I don't even know what it is. I kind of figured I'd throw, like, you know, maybe $100 into it or something, whatever. It doesn't matter anymore, right? And so I just kind of was like, nah, just kind of gave up on it. Well, years later, it became a lot easier via, like, say, Coinbase and these exchanges. And at that point in time, I was like, you know what? Yeah, I do think getting something, especially with it being so easy on these exchanges, maybe I'll do that. Again, like, my story is the same as a lot of people's. All throughout the last bull market, I was just exit liquidity. I had heard this thing called Dogecoin and get the Dogecoin. But, well, I remember seeing this big ass huge green candle going crazy. And I was getting yelled at by people. You gotta get it. And, like, we were, like, trying so hard, like, oh, we get, you know, on Coinbase, get as fast as you can. And then it started just dropping, right? Exit liquidity over here. And that basically sums up the entirety of my experience in crypto, right? Until I'd given up on it. And then I was like, you know what? I need to learn how to do it the right way. I need to learn it properly because the gains are just too good. The gains are just too good to overlook, you know? So yeah, I started deep diving. And, you know, I would get anxiety about, like, what about this? What about that? You know, like, you know, what happens if I buy a coin and it just starts dropping through the floor, right? Well, how do I know what's a good investment? How do I know that the money I'm putting into it doesn't just go to zero? You know, what if it's money that I can't lose, right? But I still want to invest it, right? Is it only that the only thing to invest in crypto is money that I can lose? If that's the way I got to think about it, then I'll think about it this way. I've been trying to do this since 2017, throwing money to, like, say, maybe like some kind of business or like the stock market or whatever, just to watch things go down, quite frankly. And nothing, like, substantial either. Any gains I made, I'm like, yay, I made $100 out of $100. Wow, that's amazing. How did I do that in the stock market? That's insane. I pulled $200, $100 like profit. I mean, it just, I knew that there had to be a different way. And originally I was going to do actually this particular business, but I started looking at an opportunity. That is exactly it. That is exactly it, Niles. That is exactly it. That's my fucking name. Oh my God. But yeah, I decided, you know what, I'm gonna give it one last chance. I'm gonna give it one last chance. I'm gonna have Charlie Miguel kind of be like the last opportunity. And I started learning. I started chatting a lot with people in the Citadel, and it was a lot of information for me to take in, and there was a lot of learning that I had to do. And I just put my nose to the grindstone, and I went and I learned as much as I possibly could. Even and like, hey, I was working the entire time, but while I'm working, it was kind of brain dead for me because I already know what I'm doing really well. And so I would just plug in. I would just plug in for 8 to 12, maybe even 13 or 14 hours, and I would just go. And I'd just be listening, learning, sucking it all in, right? And then I'd go home and I would try and do things on the computer, and I was just learning. And yeah, I guess here I am now, right? You know, still working hard, still trying to learn new things. You know, there's a lot, I mean, especially when on the TA side, right? Like Jay blows my mind sometimes. I'm like, wow, he's speaking some kind of like gibberish over there. But I'm starting to get the ideas now, and it's like the more and more I'm watching and learning from everybody else, the more that I'm opening up my mind for all this, the more and more I'm getting more confident in specifically being like, oh, should I buy right here or dynamic DCA next week? And then I legitimately can pull up a chart and like put some things together and be like, oh, I should do it right now. And then like literally 3 days later, they're like, oh my gosh, this thing is pumping. And then I can like be like, hey, look at this chart. I bought right here. Look at this money, right? So this has happened several times now with me, and it's because I've been trying so hard to try and learn and make sure everything I'm doing the best that I can, quite frankly.
I gotcha. Hey, Brendan, real quick, I want to get to you here in a second, but seeing that we've been talking a little bit about 401ks and there's been some chatter about it, I wanted to pull Tracker in and see if there's any insights or anything specific he could tell us that's on his mind about 401ks.
Yeah, appreciate that. Yeah, so let's face it, some people are sitting out here with 401k money and they're like, what the hell do I do with this? I'd like to get exposure to crypto or figure out how do I leverage this. So I can tell you most 401ks, there are two different versions of 401ks. You have traditional, you have Roth. I understand all that. But what I'm trying to get at is you have to talk to whoever your 401k is with and talk to them what your options are. But if you can roll it
Tracker,
I think we're rugged.
Yeah. Are you still there, Tracker? Did you cut out on us? You having audio problems?
He's got too much knowledge, man.
That's probably what it is. His computer's exploding because it's not the smartest thing ever.
Yeah, he said he was having trouble with his browser. That might be it.
Gotcha. Yeah. Okay. Tracker, just hold that thought real quick. We'll come back to you. Brendan, if you could hop in real quick, give your origin story a little bit, and if you could just hit our lovely audience here with that not financial advice stamp for us. Go ahead, man.
Yeah. So thanks. Thanks everyone for listening in. I know it's kind of an impromptu stream, and we're just excited to talk about crypto, excited to talk about the markets, and just shoot the shit from time to time. So the first thing is every time we stream, nothing that we say like Pepe's better than a 401k. That's not financial advice. Okay. Nothing that we say should be taken as financial advice. We're not experts there. So these are just opinions, and that's it. Take it as is, or take it as entertainment. So my origin story, the first time I ever heard about crypto was Bitcoin in a year called 2011. I don't know if any of you remember that year. That was a long time ago. I have a hard time remembering yesterday, but I do remember a friend coming to me. Back then I was a bit in the tech side, out writing web pages a little bit here and there. Past history, nothing I do anymore, but kind of just talking to people about things. And someone mentioned this Bitcoin to me, and I was like, "What's a Bitcoin?" And they're like, "Well, it's an internet protocol that allows you to mine Bitcoin, and it's a cryptocurrency." And I'm thinking to myself, okay, it's a currency. So where's the value come from? How can you just create a cryptocurrency from a random computer program? And honestly, back then in 2011, nobody could really explain what it was or how it worked. And I was just like, I don't buy it. And my buddy's like, just throw $20 in, just throw $20. And it probably would have got me at the time, I don't know, somewhere in the 5 to 8 Bitcoin range, just out of $20. And you know, I just, $20 wasn't anything, but you know, I had no idea, and it just didn't make sense to me. Fast forward to 2020, start to get a lot more interest in looking into crypto a lot more. So from first time in 2011 to 2020, haven't touched it. In fact, really almost completely forgot about it, that it even existed, which is sort of it's kind of bad on my part. But I call my 20s my dark days, and yeah, so there was a lot of partying and drinking, and really not having self-responsibility when it came to, you know, my financial future, my well-being, bettering myself. And so it took me a while to grow as a person, to find other avenues that I wanted to, you know, that I thought could help me better myself. So 2020, my friend starts talking to me about crypto. He's in crypto. I'm looking into it. I'm now, you know, reading up on the topics, reading up on you know, I'd already read up on blockchain technology in general, so I'd already had a base knowledge there. But then crypto pops in, and I'm like, okay, well, maybe I'll start buying some. So I think it was either end of 2020 or early 2021, where I started to buy Bitcoin and Ethereum mostly. In early days, I bought Bitcoin, I bought Ethereum, I bought Cardano, and then I branched out later on into other alts like Matic, Solana, Doge. I got into, obviously, but I didn't get into Doge early where people were making a ton of money. But my first foray was, you know, investing in the stock market. I have a, you know, economics background when I went to college, and so that was sort of my focus. And then I went really heavy into crypto. The market started pumping. I had been sitting on a lot of, you know, sort of just savings that wasn't doing anything. It had no money, I wasn't gaining anything having it sit there in the bank. So I'm like, all right, I'll put it into crypto. I now understand this technology. I truly believe that what they're building here is a decentralized way to create, you know, interpersonal, interbanks, interbusiness transactions. And then as I learn more about it, you know, we get into NFTs. You know what the NFT might be the future as. You're not going to have a real estate agent purchasing, you know, signing papers on a house anymore. You're going to be purchasing an NFT that is the deed to the home that you're now going to own. So if you just look at crypto in every single way, it really, really creates a use case in many areas, in many different parts of our world. And so I really started to become a believer. Market goes up, I'm up a lot of money. I take a little profit here and there, a few thousands, and then I ride it high. Bitcoin hits all-time high, breaks all-time high, smoke a cigar, open a fancy bottle of scotch, and then I watch it fall. And I didn't know what I was doing. I really wasn't, you know, in 2021, I was just starting to learn some foundational aspects of crypto. But it wasn't until that, you know, mistake on my part that I really realized that, you know, I need to be self-sovereign, self-sufficient, and knowledgeable to make my own decisions. Yes, I can listen to other people. I can take their opinions and I can weigh that against my own opinions, and I can make a decision for myself. Unless you can make a decision for yourself about when you want to buy, when you want to sell, and what you want to hold long-term, then it's going to be challenging for you to not continue to make mistakes, which Nate mentioned, which I've mentioned multiple times. And where I've now built myself back to is a very, very solid foundation for the future. And so that's why I'm here, you know, because crypto is important to me. Everything that you guys said about it being decentralized, being it away from the banking system. Let's not forget to add on that Canadian crisis that the only way that they were able to shut down people's bank accounts, okay, was the Prime Minister of Canada actually took wartime law essentially like Sharia law, and enacted it in Canada. He's only supposed to use that during wartime when Canada is under attack. And so he took this crisis, enacted a wartime law, and said, okay, now I can freeze any accounts that I want. No due process, right? No judges making sure that these people are actually in the blockades. It didn't matter. If they thought that you were anywhere closely related, they were shutting down your accounts. If they thought you were sending money to a trucker, they were shutting down your accounts. Now, I don't know about you or me. Maybe they're shutting down people's accounts that have nothing to do with it, and they just have the power to do so now. So I'm afraid. I want to say afraid. I'm not trying to be conspiracy theorist, but that's a real life example. That happened. You know, my grandparents are from Quebec. My last name is Mercier. My family's from up there, so I have a fair knowledge about how the political regime works in Canada. And granted, it's different here because they don't have the same freedoms and they don't have the same rights as we do. But nonetheless, that's a very important part of crypto. And I could continue here, but I don't want to take too much time. I feel like I've already talked about it a lot. But I have a 401k. You know, I started investing in 401k when I was 18. And so I just have sort of a safe haven there. If I want to take some money out, if I want to take a loan out and put it into crypto, that's a real degen play. I don't recommend it unless you really, really, really know what you're doing. But it does give me some financial, plays in small amounts if I want to. So I'm not against 401ks. They're just not going to really give you any X's long term. You're not really going to make a lot of money there. So.
Hey, Tracker, I want to come back over to you, give you the floor again, let you go ahead and finish your thought, and then we got a couple solid questions in the chat that we want to get to. But yeah, go ahead, come off mute. The floor is yours.
Yeah, I appreciate that. I don't know what happened on my side. Everybody just sounded like they're on helium. So sorry. Yeah, to go back to what he was just talking about, the Quebec thing, I would like to talk about that. So imagine what happens when CBDCs come out. That was just a taste. That was like an appetizer of what possibilities could happen. So basically, technology is great. You know, there's a lot of great tools out there. Guns are great tools. Unfortunately, the actors that are using them will determine if it's, how well is it treated is it done for the good, or is it done for more or less evil or bad? So just keep that in mind as we're moving towards this, CBDCs. FedNow is already launched. We're going into it's the predecessor CBDCs. It's already a given. Anybody telling you it's not, it's straight up lying to you. So just keep your ears to the ground on that one. Follow that story. It's very interesting. But going back to 401k. So basically, if you have money in a 401k or an IRA, if you can move it into a self-directed 401k or IRA, you'd contact your advisor to see if that's an option at your company you're with. A lot of times you can. Otherwise, if you retire or if you switch companies, that's your one window. You can actually then move it into an IRA account where you can then do self-directed as well. So those are the only times you're allowed to do that. Yes, you can take loans out against it. That's one option. You certainly can.
Oh no, man! Trackers, his man.
Yes, and they
Tracker, your browser keeps rugging you, brother. Yeah, you're like the last 10 or 15 seconds is like nothing. I think your browser's really rugging you, brother.
What are you using, man? Like, I just use Firefox. He's got to have like Linux with freaking Opera or Brave or something. Something obscure.
All right. Well, anyway, while we're waiting for Tracker to get back on, Josh, we haven't heard you speak too much, man. What do you think about this question? Why invest in Bitcoin when the returns aren't as large? Why not just invest in Pepe 3.0 or something along those lines?
Dude, that's a perfect question for Josh. This is like Josh all the way.
Well, okay, so listen. So Bitcoin is going to be your store of value. Okay, so I'm not against investing into Bitcoin. What I am all for is managing your risk level and determining what exactly your risk level is. All right. And if you decide based on your personal finances and your investment strategy that the best thing for you to do is going to be take on maybe 30 to 40% risk. And then the other 60 to 70%, you want to be risk averse. Then 60 to 70% of my portfolio is going to be into Bitcoin. All right. Now, of course, I'm going to pay attention to the cycles. I'm going to do all the research that I can. I'm going to learn all the concepts of the 4-year cycle and all that stuff. So that when I purchase my Bitcoin, I'm not purchasing it at the top, and I'm not going to watch my portfolio tear through the bottom during the middle of a bear market. So it all depends on your risk tolerance. I'm more of a 50-50 sort of person, or a 50-50 sort of individual personally. That's just me. I'm one of those people, you hear different influencers and you hear crypto folks talking about it all the time, where I can't remember exactly what it is, but I don't want to purchase like a percentage of a Bitcoin. Like, that's not what I want to do. It's just, I don't know if it's part OCD in my head. I don't know what it is, but I want to have, whole number Bitcoin. So what I invest in now, I think Ethereum is becoming very similar to Bitcoin, to where it's becoming a very trusted asset. So I put my risk averse percentage into Ethereum, and then, I scan the market. I do my due diligence. I study the coins that I like. That might be a little bit more risky. All right. But still have a potential upside. They got a solid use case. So at the end of the day, it's not so much. I mean, I'm not going to sit here and tell you don't invest in Bitcoin. I don't think anybody here is going to tell you don't invest in Bitcoin. We're called DGen Roundtable simply because there are a lot of people that have very degenerate plays in here. We had Billy on the stream. Billy likes to do DGen plays. I know Nate loves the LP side. That's not as DGen as some other people, but it's still a little bit on the DGen side. And we got a couple different guys that we've gotten close with that, they'll do swing trades and all that different sorts of stuff. So it's not so much don't invest into Bitcoin. It's figure out what your risk strategy is. Anybody that's telling you don't invest into this, go into this, unless they're willing to be have fiduciary responsibility over you, take what they say with a grain of salt. It all, everything falls on you. It all depends on your due diligence, your research. You're responsible for buying, you're responsible for selling. And you're also responsible for the insight and the information that you obtain, and the influencers that you listen to, and the shows that you pay attention to. So nobody here is going to tell you buy this coin, sell this coin. We might tell you our personal strategies, but at the end of the day, that's something that's not going to happen out of this show, because all of us on the panel, we would have a big problem if somebody came on here and they were pretty much, selling the world for a certain coin or whatever. That's my insight on that. Do we have Tracker back? Or I'm sorry, any of you guys, Jay, Nate, Brendan, did you guys want to speak on that also? What do you guys have? Sure. Sort of the same mindset, or how do you guys feel about it?
The way that I look at it, right? And this is kind of what, like, the way that I see it, right? In every single like investment of any kind, it's always going to be the same thing, right? If you have more risk, you have the potential for more gain. At least it should be that way. Otherwise, just don't even try with it, right? So when it comes to Bitcoin, exactly as you said, Josh, Bitcoin is your store of value. It's the safer one, right? And so technically speaking, you'll have Bitcoin do this, right? And like say, like I see you there, Weeb. ETH, is going to, like say, ETH here is going to kind of do this. I would say outpace. Sure. Okay, all right. You'll get more gains with ETH. ETH is still kind of like a safer blue chip, anyways. So here's where you start getting into the kind of the nuts and bolts of like getting into altcoins. If you can outpace ETH in gains, your altcoin is doing good. All right. I would consider a 10x on ETH being probably about as good as you're going to get, really. And then maybe about 6x on Bitcoin, maybe 8x, right? I would say that's about as good as you're going to get, truthfully. Now, there are certain altcoins that are still very safe, enough at least, where you can be like, oh, that's almost a guarantee for a 10x, right? It's because it's already been proven to do really well, right? However, not always a guarantee, not financial advice. But then you got these other ones, right? One like L1s that just came out. Pulse Chain, good example. Pulse Chain has a very strong case of 100xing. In fact, I've got a case itself that it could very possibly 1000x. Now, does that mean it's actually going to happen? Could it literally go to zero? Yes. Does it have a higher chance of going to zero than ETH? Yes. Careful. A big mistake that a lot of people make and get wrecked with is they say, I don't care about the safe bet. I don't care about at the very least having this amount put aside that is almost guaranteed to go up in price and be safe. They're like, yeet everything at the wind, put it all into this one degen coin, put it all into Wojak coin, scam coin, right? And then it goes to zero and they're like, oh, but I'm all out of money now. Yes. This is why like as Josh was saying, 50% in the Bitcoin. Now, for me personally, when it comes to like Bitcoin and ETH, I'm making that only 20% of my portfolio, but I'm purposely trying after those higher gains, right? That could get me wrecked in the end. It really could. So I'm being very cautious and careful about it, and I'm especially researching a lot into it. But about 20% is actually going to be those safe bets. So I know for a fact that at least 20% of my portfolio is going to do really good. Is it going to be the best? No, but at least it's going to do really, really good. And Jay, actually, I think you've kind of talked about that a little bit. You got something on that?
Yeah. To add on to what's already been mentioned, right? I think the guys here made a ton of really good points. What you're going to invest into is going to really depend on your risk tolerance, right? And so, like Josh mentioned, if you're higher on the risk tolerance curve, then you're probably going to be able to afford to invest a significant amount of your capital outside of Bitcoin, right, into higher risk altcoins. But the reason why the majority of us will recommend that you hedge your portfolio with both Bitcoin and Ethereum is, like Nate mentioned, they are the safe bets because they've been around for a while, they have staying power, and they'll be here most likely forever. And like Nate mentioned, right, are you not going to be able to get the kind of returns from Bitcoin and Ethereum that you could with altcoins? I think most people will agree with that. But here's the thing. You don't have a crystal ball. And the unfortunate reality is you're going to make bets on some tokens that will go to zero. That's just part and parcel of being in this market, right? That's extremely volatile. The good thing about hedging your portfolio with Bitcoin and Ethereum is that even if all of your other bets go to zero, the likelihood that Bitcoin and Ethereum will go to zero is, well, I don't think that's going to happen, right? Is the possibility there? Yes. Probability-wise, no. And so that's what I like when I do consultations with people and they ask me this question. I tell them, look, if all of your other bets go to zero, you can guarantee that you're still going to make a pretty sizable return with your investments into Bitcoin and Ethereum. And so that's the reason why I suggest those, right? And I think it would be foolish for anybody to put all of their capital into just high risk altcoins, right? That's a losing bet, and you might win a few times, but I guarantee you, if that is the style that you're going to adopt when investing in this market, you are not going to have a good time, right? Because even when you win that 1 out of 10 times, you're just going to put it back into another coin that will rug, and then you're going to be back at ground zero. And you don't want to end up in that scenario, because that's a lot of time and that's a lot of capital invested that could have made you some sizable returns. So that's my 2 cents on the matter.
Hey, Brendan, I want to bring you in here real quick, and then I want to get Tracker's opinion. Hopefully his mic situation is squared away. But Kathy asked another really good question here. I want to go ahead and bring it up. She says, so what do you think about crypto versus stocks? I know you're super knowledgeable in this topic, and I know Tracker is also. So I definitely want to, Brendan, I want you to go first, and then, once you're done, Tracker, if you could just hop in as soon as he's done.
Yeah, sure. Cassie, great questions. Thanks for joining in and asking so many good questions. It is a fantastic question. One of the things is the same argument of, hey, Bitcoin or altcoins, right? Well, you have more opportunity for gains, but you also are taking on more risk. The stock market has been around for a long time, and it has a large history of success. Now, success in world's terms is what? A 10% gain, right? Now, I don't know about you, but I live in South Florida. Even still, when the average inflation for the rest of the country is 3%, my inflation is still 9.5%. Okay. So if I'm gaining 10% on stocks, I'm still not making anything. So, there's 2 things. Again, as Jay and Josh said, how much risk are you willing to take on? I still personally do have a very, very small portfolio of stocks, but I am most heavily invested, 90% plus in crypto. But there's a time to invest in stocks, and I think there's a time to invest in crypto. Right now, crypto is essentially it's still brand new, right? Everything is being built out. It's the early stages of the internet, is what a lot of people like to say. And so therefore, yes, there's risks. What happened in the .com bubble? A lot of projects, a lot of websites went to zero, but you could have made a lot of money on them had you been in at the right time. However, there were some really strong projects in the .com era that could have made you a ton of money because they were a bit safer and they had a really good plan. But so Bitcoin, we're already starting to see some of those coins like Bitcoin, like Ethereum, become very respectable and trusted sources of investment. So if you ask me, hey, will I ever invest in stocks again? Yeah, definitely I'll invest in a stock again. I think that there are cutting edge companies that are publicly traded on a stock exchange, just like there's some great technology and companies being built in the crypto space. So while I think overall right now, my personal place where I want to put my money is crypto, but if you come back to me in 2 years at the top of the bull market, I might want to take some of those profits. I might want to roll them into some early company projects. I might want to roll them into Bitcoin and Ethereum, obviously, maybe some hard assets like real estate and other things that hold value as well. But for me, again, I come from a stock standpoint. I studied finance and economics, not what I ended up getting my major in, but I've studied a lot in my lifetime. So yeah, stocks, great. In some cases, safer in some cases, but again, you're not going to gain that much money, and it's going to be hard to outpace. At times in the history, it's going to be hard to outpace what inflation is like. So that's my 2 cents. I think I'm a little bit answering that in a roundabout way, but good question.
Tracker, Brendan mentioned a couple good points. He mentioned how, he might have other investments outside of just stocks and crypto. So if you wouldn't mind answering the question stock versus crypto, and then maybe if you have some additional insights on maybe additional investment vehicles, we talked about that on our stream on Sunday. If you could give your insight, I got my paper and my pen ready, and yeah, I'm ready, buddy. You there? I see that you're off mute. I think I can hear you typing. Are you able to speak at all? All right. Jay, did you have any insight on that? Is anybody hearing him? I'm not hearing him right now.
In regard to crypto versus stocks,
yeah.
I like
Take it away,
crypto.
my dude.
I like crypto. Like I said, the reason why I got into it is because it is the avenue where I saw the maximum amount of returns for my capital, right? Aside from all the other benefits. And so that's all I needed, really. To make a 2x in the traditional financial market, probably a few years. I mean, a cursory glance at the history of the S&P 500 can tell you that. And so I'll stick with crypto, right? And as long as you're financially responsible and you do your due diligence and you research the coins that you're going to invest into, I think it'll be very difficult for you to not make money in this industry. So yeah, that's my plan. I'm sticking to crypto 100%.
Awesome. Hey, Niles, we see your question, dude. That's a super good question. We're going to come to that. But I want to answer Jeff's question first. I kind of want all the panelists, if they can, to come off and just give their quick elevator pitch for which one they think, whether PHEX or Pulse will be more bullish this cycle. I'll start. I think Pulse is going to be most bullish this cycle. Just it's the L1. I think the L1 is going to shine, and that's my personal opinion. But yeah, what do you guys think? Let's start with Nate. What do you think? Go first, buddy.
Pulse all the way. Yeah, so you're correct about the L1. It's clearly going to do better, just off the bat, right? The L1 itself of Pulse Chain is going to have to find its place, right? It's already broken records for most used, and well, there's actually a lot of records broken currently with Pulse Chain being an L1, which is already bullish in and of itself. It's kind of dying a little bit right now, but it's going to be coming back, quite frankly. There's a lot of fuckery going on right now with it. Obviously, it was Hex itself. The Pulse Chain is the ecosystem of Hex. Hence why Hex in the long run will ultimately be the best. It'll be the Bitcoin, it'll be the gold of the whole entire ecosystem that is Hex, because it is an ecosystem at this point, and people are continually creating more projects on the Hex ecosystem featuring Pulse Chain, right? However, Pulse Chain is a brand new kid on the block, right? It's the new shiny object, and for this cycle, it's going to do a lot better. So actually, I do have a strategy where I'm going to be having a lot of Pulse and Pulse X, because these two go hand in hand together. They are going to outshine Hex in general. And then what I'm going to be doing with that is actually moving those, come the full bull, right? Obviously, I'm going to be, I'll be moving them into Hex itself. And then Hex is going to be ultimately, like 10 years down the road, the ultimate gainer, right? So it's kind of like Pulse does this, right? And Hex is still down here. But then by the time we're all done, it's like 10 years later, Hex is going to be up here, and Pulse is maybe slowing down a bit, or Pulse X is slowing down. But I think overall, ultimately, Hex is the way to go. I would suggest, not financial, advice, but my personal opinion, what I would do is go Pulse heavy, Pulse X heavy this cycle, and then get into get into Hex, all the Hexes heavy later. That's E-Hex, by the way, too. E-Hex is not done yet. In fact, E-Hex, I got a funny feeling, is going to be the, what do you call it, the luxury item. Pulse Hex is going to be the cheapies, like the Walmart, whereas Pulse Hex is going to be the Nissan to E-Hex's Lamborghini. That's the best I can get out of that. But I've got a funny suspicion about the direction that these ecosystems are going to be going. So I can elaborate. This is something that I'm working on right now in the background. Probably do a show on it here pretty soon. But yeah, if anybody's got any questions on that, I might be kind of throwing that out a little early here.
Hey, Tracker, which one are you more bullish on this cycle? Are you more bullish on P-Hex, or are you more bullish on Pulse?
I'm more bullish on Pulse. I mean, it's the L1, right? Can you guys hear me, by the way?
For sure. Yeah, you're sounding pretty good right now.
All right, let's just keep it. Let's hope it stays the same. Yeah, definitely Pulse over Pulse X. I think Pulse the L1. It's going to be a shiny one that everyone's going to be gravitating to. Now, with that being said, you could also be looking at Hex. I mean, Hex is what everybody kind of knows.
This is so tragic. We keep losing him.
I know this
Right?
kind of almost sounds like internet issues. I almost wonder.
Yeah,
I think it's the internet.
Uh huh.
Yeah. Hey,
That kind of sounds like
Jay,
internet.
Jay, which one are you thinking? Which one are you more bullish on?
Personally, just by, I mean, looking at history, right? The L1s tend to outperform. P-Hex will do good, but the thing is, right? It's tied to Hex. It's one half of the Hex pair. Pulse it's in its first cycle, right? It's an L1, and it's what everybody's going to gravitate to, because that's the thing that they're going to hear about, right? They're not going to hear about Hex. They're not going to hear about P-Hex. What they're going to hear is about Pulse Chain, right? And so what are people going to tend to do is they're going to buy the thing that they hear about, and people are going to hear about Pulse Chain. And so that's where the overwhelming majority of capital that's where the overwhelming majority of capital is going to flow into. And so can the other things do better? Absolutely, right? This is just speculation. But if I was going to make a bet, I'm going to put my money on Pulse. That's going to do better, right? Because it's kind of like, you know how Bitcoin is the rudder that kind of keeps everything floating? In the Pulse Chain ecosystem, Pulse is the rudder that's going to keep everything floating, and that's going to keep the whole ecosystem moving. So that's what I'm going to put my money on. What happens in the future? Who knows, right? The price will tell us what it wants to do. But if I was going to make a bet, it's going to be on Pulse.
Hey, Brendan, what do you think, buddy?
Well, I want to diverge for a half a second to another topic because it's funny. You remember we were talking about those fluffy slipper coins last episode on Sunday? We don't recommend it. Well, in the last 12 hours, it nearly did a 2x. So meme coins are a funny thing. I don't recommend buying it, but the thing had no movement for the last few days, literally a straight line. And now it moves, so it's funny how some of these meme coins work. And
That's literally the gambling. It's literally the gambling, man. That's just pure luck. Oh man.
Now I hadn't bought any more. I have a little moon bag left. I made my 4x, 5x early on with a small investment, but yes. So I just wanted to bring that to light. But guys, I can't disagree with what you're saying. I'd love to have a contrarian opinion, something that's good for the show, but I just don't think it's realistic to think that PX is going to outgain Pulse. Like you guys are saying, layer one, this has been a fantastic fork of the Ethereum blockchain, in my opinion. I just had a Hex stake end, right? And you have to pay gas fees to essentially remint your coins after a stake. And so I have it on the eHex side, and it got copied over to the Pulse side. And the first time I tried to claim my Ethereum, or I tried to remint my coins, it was $103 for gas fees. That was more than what the current price of what the coins I made were. So I waited, ended up getting it down to $30 to mint my coins. But it cost me 13 cents. Cost me 13 cents to mint the same amount of coins on Pulse Chain. So the value is real. What Richard Hart is doing is real. And if Pulse Chain, it's not even a comparison to which one's cheaper. And so I just see so much usability, so many use cases for Pulse that, yeah, I think it's going to outperform this cycle and for cycles to come.
Hey, Tracker, I want to give you the opportunity to come back in and go ahead and finish out your thought. You were saying that you think the L1 is going to take the cake. I think that's a pretty universal thought amongst everyone on the panel right now. Did you want to go ahead and close out your thought? All right. Well, it looks like he's still having mic issues. So we're going to hop on to Niall's question here. And how I want to do this, he asked a couple different questions. So I kind of want each panelist to go through and just answer one of the questions. All right. So I'm going to start with you, Nate. How do you plan on taking profits? I want to give you that question. And, I want to turn the floor over to you. What's your plan for taking profits for this bull cycle?
Move them in the stables.
All right. Does that complete it?
Do you want me to continue? I do have a strategy, but do you want me to continue?
Yeah, I mean, it's up to you, man. If you want to highlight your strategy, if you want to keep it to yourself, it's ultimately up to you, buddy. Whatever you want to provide.
No, bro. So yes, step one, put them in the stables, right? Obviously, so you need to take the coins that you actually legit like, the ecosystems, the coins that you really do truly like, right? The projects that you actually like. Keep a little bit of a moon bag. Shout out Brendan over there with his fluffy slippers, right? Well, basically, like, what I'm looking at is, obviously I'm going to be holding ETH and BTC long term, right? That's going to be like long term. This is going to be, I would say, almost like not even retirement money. It's going to be the equivalent of grabbing like gold and locking it away in a safe just for safekeeping, right? Like that's the equivalent for me when it comes to those two. Like gold and silver, I threw them all in there, boom. Do I have it? I don't know. I forgot about it, right? But when it comes to all these other altcoins, right? There's a few of them, a few projects that I particularly like and I think are going to be incredibly valuable way later down the road, right? Like Matic or Polygon is one of them. Institutions love it. Institutions absolutely love Polygon. You really can't beat it. And it's incredibly cheap right now. Gather up some Matic and sit on it for a good 10 years. I'm pretty sure it's going to go crazy. The entire Phantom ecosystem, for me personally, I love it, right? It's having some issues right now, but I believe it's not the first time that one of these L1s have had lots of issues and people are like, it's going to zero, and all of a sudden it's like the next 100xer, and people are like, huh? Right? It's really good. And so I'm going to put my faith in it, right? I'm going to put my faith in it. I'm going to be allocating basically completely out of it, except for a small little moon bag of all the ecosystem coins, right? The other one is going to be the RH system coins. Again, exact same sort of deal as Phantom. I like it more though, so I'll allocate. So it's not going to be just like a tiny little amount, like maybe 5%, right? No, I'll keep like maybe a good 10% of the RH coins, right? The whole Hex ecosystem. Now, with that being said, overall, let's pretend like you're taking the entirety of my portfolio, right? I am for sure going to be taking at the top, or whatever I deem the top, whenever I'm ready to take profits. Basically, when you get top signals, start laddering out, okay? You're going to want to ladder out into stables and then take those stables. Actually, it's not even the stables. What you do, there's a certain technique where you actually take those coins, you move them to an exchange. The exchanges, you can actually switch them for stables at that point in time. Obviously, taxes are a thing, but never try to avoid the taxes because they are going to bite you in the ass if you try and do that, quite frankly. So you're going to want to move over into exchanges, get things swapped out, and from there you can choose what you want to do with it. Most likely you're just going to want to send it back to your wallet, or maybe bring it out into actual fiat again, right? That's how a lot of people cash out. But at that point in time, right, let's say I did that with all my coins. I'm completely out of most all my coins with a small amount, like a tiny amount of Phantom ecosystem overall coins, and probably double the size, but still a small amount of Richard Hart ecosystem, aka Hex ecosystem coins. And then I've just got my ETH and BTC. Okay, we're gonna hold there. We're just gonna hold there. That I'm gonna keep that, okay? And then with all of these stables, which is just pure profit at this point, I am then going to be putting it into multiple stables yields, and these yields usually average anywhere from 10% to like 1%, right? And I will be LPing those and continually just getting percentages out of them. Now, depending on where I have them, which ones I think are safer, which ones I think are like maybe a little more degen, I'm going to be using them as retirement money, aka money that I can literally like every single day or every single month pull it out, be like, this is the yield money right here, right? And I can go ahead and go spend that, offboard it, spend it on hookers and blow, right? And at that point in time, the other like more degen ones, or sorry, the safer ones that I think are safer, I'm going to continue rehypothecating those, actually building a bigger bag as we're going down. Okay, as we're going down into the next bear, I'm just going to keep that going, keep it flowing, and then once I kind of sense that, hey, we're starting to hit kind of like this this bottom, right? It seems like we're getting near a bottom. I'm actually going to start pulling things out, and when I pull things out, it's like dry powder. I'm ready to go, right? Where did I put my money? And most likely, a lot of my money will actually be put back into the original coins that I had, but I'll be buying a shit ton more of them, just a shit ton more of them. So that's kind of my strategy right there.
Gotcha, cool deal. Hey, Brendan. So the next question that I want to pretty much pose to you is, how much of your portfolio are you going to be selling out?
That is a fantastic question. The first way that I want to answer it is you have to figure out what your long-term holds are that you're never selling. You know, I have some Bitcoin and I have some Ethereum that I am just holding. That's in a wallet. That's in a cold storage wallet. That's not connected to anything. And that's just something I'm going to hold. Okay. Because I want some Bitcoin. I want some Ethereum and I don't want to sell that. Okay. Now, what percentage of that portfolio is it going to be? When we get to the full end of when I'm fully laddered out, as Nate said, probably in the 20% range. And that might mean that some of that taking profits means buying a little bit more long-term Bitcoin, a little bit more long-term Ethereum, but not at the tops. I'll wait to do that until it drops. But max, I will have 20%. But again, we're not just taking 80% out. We are slowly laddering out probably 5 to 10% of our bags at a time, because again, we don't expect to catch the top. We don't expect to catch the bottoms. That's why you ladder in, right? We call it dynamic DCA, right? Dynamic. And then we're going to DCA out. And it's very hard to catch the very top, very hard to catch the very bottom. But it's a very good way to get wrecked if you don't start taking profits. And, last bull market, almost everybody was saying, hey, we're going to hit at least 100K Bitcoin. We're going to an elongated cycle. This is going to be maybe a 6-year cycle instead of a 4-year cycle of Bitcoin. And there was that was the mainstream view. And had you not started taking profits before the all-time high into the all-time high, then you ended up missing out on making money that you had planned to. So buy low, sell high. That's the bottom line. And max 20% is what I'll keep as probably my moon bag.
Right on. Hey, Jay, I want to come on over to you next. I want to give you a two-part. So what ecosystems are you leaving a moon bag for, and what's your ladder out strategy?
So as far as ecosystems that I'm leaving a moon bag for, that'll be determined. I can't really answer that question now. I was actually discussing this with Niles a little bit earlier. I told him that the ecosystems and the tokens that I'm going to leave a moon bag for will be determined by what survived this cycle, right? So depending on how they perform during this next run up, right, during the top of the bull, will really indicate which assets are going to survive the bear market, right? And so the stronger the performer is, during this bull cycle, those are the assets that I'm probably going to leave moonbags for. And as far as the ladder out strategies, look, I think it's fairly obvious already that I lean pretty heavily into technical analysis. As soon as I see significant bearish divergence form on the assets that I'm watching, I'm going to start laddering out. Right, when I see that greed and that euphoria hit all-time highs on the fear and greed index, I'm going to start laddering out heavier. Right, and in some positions, I'm probably going to completely exit. Right, aside from my long-term holds like Bitcoin, like Ethereum, and then I'm just going to buy back down, like what Nate said, like what Brendan said. I'm just going to buy back down. The only difference is I'm gonna take heavier profits than most people. Right, I'm going to be completely exiting some positions, but on the flip side, I'm going to be buying back those positions, especially the ones that survive and do really well in the cycle. I'm going to buy back those positions during the next bear market, and so that's my overall strategy.
Hey, Tracker, I want to bring you back in here. I want you to close out this question. What are your plans for the profits that you take at the top? When you start getting those sell signals after you ladder out, what are your plans for those profits, and is LPing part of those plans?
Can you guys hear me now?
Yes, sir.
All right, I'll see how long this lasts for. Basically, I would be looking to, my initial thing is that rule of three, get my original principal and a little bit of extra that I invested into the pulse chain ecosystem, take that out, and then are you talking about the end of the bull market, or are you talking about when we get the first run up in our ecosystem in pulse chain?
I believe the upcoming bull market. So yeah, the overall crypto bull market.
All right. So as it goes up, I mean, there's another strategy I want to start building into GameFi positions, because I still think this is this year, maybe going into early 2024, it's going to be opportunity to move into some GameFi positions, because there's a lot of stuff brewing in the entertainment industry. Obviously, everybody saw the Apple headset come out when Tim Cook was presenting it, and immediately when he was presenting 10 minutes in, he switches over to Bob Iger, who's like basically the CEO of Disney, and Disney's been partnering with Polymatic, doing all the background for their crypto, and based that entire world. And they're talking about immersively bringing in Disney into the VR set. So that's a big thing. I mean, if anybody's seen Ready Player One, that's what's coming. I don't know if it's going to be that soon. It's going to be a little wonky at first, but that's coming. All that stuff is brewing. It's setting up to be the next, probably that could lead into the next, bull cycle or not, but it's going to take some time. But there's positions I want to roll into there. Other things that I'd love to do at the end of the bull cycle, get enough capital. I've got another business. I'd like to rotate some of that out, move into some hard assets into real estate. I did add to the comment to answer your question, what other opportunities are in the market? I think people need to start thinking about hard assets. We're moving into a time in the world that owning, I mean, everybody's probably seen those commercials and stuff, you'll rent you won't own anything and be happy, right? You need to start thinking about hard assets, owning stuff that's actual tangible, that's actually worth something, whether that is real estate, land, collectibles. People don't think about collectibles. The wealthy do think about collectibles. It's very simple and easy to move a lot of money around with collectibles. So artwork, things of that nature. I mean, there's tons of stuff you can get into that has tangible value that people look at as that's valuable, that does hedge against inflation. There's a reason why you keep seeing, these auction shows go on for collectible cars and things that keep going up and breaking all-time highs. It's not because they're becoming more valuable, it's because the dollar's becoming less. So you need to figure out ways to move your money into areas that will be able to hold up on the long term. So hard assets are something you really need to be thinking about. That's the long-term picture. I mean, that's real long-term. But short-term, I'd say, yeah, I'd like to roll some tape. I'm going to keep a lot of positions in the pulse chain ecosystem, but just to pull some out, I'd like to diversify into some of these other digital assets, moving into meta, into the metaverse. I know everyone's talking about GameFi and whatnot in the game place. We're going to be diving into that stuff here in another future broadcast. But we're going to be gathering that information, moving into hard assets, kind of just spreading your stuff into a lot of different things. I guess that's the long-winded side of it. To go back on that 401k self-directed IRA that I was trying to answer you guys, there are things you can expose yourself to crypto and ETFs. Now, none of these are spot ETFs, but you can get into them. Grayscale, if anybody's interested, I would recommend looking at Grayscale products. They are probably the best in the industry. They've been butting heads with the SEC for a long time. Fidelity has partnered with a lot of their ETFs. They are the leaders in the market too. But BITW is one, ETHE, GBDC, and then also OBTC. And I think I put them in the chat already, but those are 4 really good ETFs that actually own the crypto, then the paper crypto, the futures crypto. You'd be surprised how many crypto ETFs have US bonds in them. I mean, it blows my mind. You can call that a crypto and it has like 70% in US bonds. I don't know how the hell that's even considered. So there's a lot of fake marketing going on out there around that. So be careful. Those 4, I've done my due diligence. I've researched them. They actually own the underlying futures crypto. It's the closest thing you're going to get currently now until we get a spot. So if anybody's interested, that's another option. That's all I got.
I want you to keep the floor real quick. I want you to close out your thought on Pulse versus PHEX. Feel like you had some really good insight there, so I want to give the floor back to you to close out that thought.
Yeah, sure. I think everybody kind of already nailed it. I mean, Pulse is the layer 1. The layer 1 for any network is going to be the one everyone's going after. ETH was for Ethereum. The net one after Ethereum, then you had other ones like Cardano. You had Chainlink for its L1. Any big moves in any of these early stages of any type of crypto that are launching, the L1 is going to be the fundamental coin for that ecosystem. So when you think Pulse chain, you think Pulse. That is the deflationary coin because that's what's getting eaten up by the transaction fees. So it's built to be basically that is the main coin for the entire ecosystem. You would want to own that because if anybody's thinking Pulse chain, that's the main coin they're going to go after. Everybody targets the L1s. There's been other ones that have run up into it. But keep in mind, this is one of the few products that allowed anybody to, get in at these early stages. Because normally it's VCs that get in early to all these, startup companies. And so the fact that it was done this way by Richard Hart, it was pretty impressive. So you can have a chance to get in here. And even if you didn't sacrifice, for those future coins back a couple of years ago, you're still getting in at lower rates than even the Wells did for the most part. So you're getting in at these great levels now. So that's going to be a good project long-term. PulseX is like Uniswap. It's going to have its day. It's going to have its time. I just think Pulse is going to be the first one out of the gate. I could see Hex coming out of the gate next, or it could be PulseX. I'm not 100% sure yet. I think it's going to come down to the LP farms, which coins are going to get leveraged into these high APR percentages, because people in Hex ecosystems tend to like to lock up their coins and gain that passive income. The LPs are exactly that. They allow you to do that. And if everyone in that community is more thinking long-term like that, you're going to have more people locking up their coins for the long term. And I know me and Nate and others are going to be diving into the LP side of things here. So we'll be diving into that piece too as well. That's all I got.
Awesome. Hey, Nate, I want you to go ahead and come off mute. Niles would like to know about your repoplication strategy.
Oh my gosh. So yeah, the rehypothecation strategy. So the ultimate idea of rehypothecation is, quite frankly, this. Just simply, you get something, you get a coin, right? You put it into a farm. You get reward for putting into farm. You pull it out, move it back over, put it back into farm, and now you have more, making more rewards. Ultimately, it's compounding. Rehypothecation, quite frankly, yeah, that back in traditional finance, it's simply just compounding, right? Now, why can't you do that with money in real life? Meaning, not in the bank, not in yielding in the stocks, not in yielding on coins and crypto. No. Ultimately, if you were to boil everything down to its simplest form, it's really quite simple how to become rich. All right? Hypothecation strategy, or rehypothecation strategy, sorry. It's this. When you're in a bull and everything's high, you sell everything you've got. Now you're sitting on a boatload of money. Wait till everything goes down and you're in a bear. Buy everything back up. It goes back up. You sell everything you got. Now you're sitting on an even bigger boatload. And one of the greatest forms of becoming rich that I discovered seems like the most no-duh way of looking at things ever. But I never had anyone actually say it for 10 years of trying to search out and learn this. I never had anyone actually say it until basically you were spending money. And it's as simple as it's the simplest thing in the world. At the top of a bull, you sell. At the bottom of a bear, you buy. I mean, it seems so no duh, but the problem is that people don't understand the amount of time it takes. With crypto, you're usually looking at around 4 years, right? So I'm at this point, I have a strategy long term of rehypothecating gains from crypto back in. I'm not really like, I really truly only need about like $5,000 a month. If I'm making millions in crypto, I'm throwing that all back in next time around. I really only need about 5,000. If I get to like extreme levels of money, maybe I'll just sit on like maybe $10,000 a month. I don't really need anything other than that, right? And so my rehypothecation theory or strategy theory is as simple as, hey, just keep taking the money out when it's high, right? And then you put the money back in when it's low. Figure out what the cycles are, the cycles of money. You have 100 years of the stock market. Do you want to know the cycles on those? You have 100 years of charts to, well, the charts are a little bit different, I'm not going to lie, but you do have 100 years of the stock market to go look at what things were, right? You can go figure it out from there. And it really hasn't changed too much. So you can actually figure that out. And that's ultimately what that whole strategy is. Now, how you take profits, right? That's that first part that I told you about there, Niles. That first part I kind of went into details about. That's how you take the profits out, right? And then maybe gain a little extra on top of it, and or maybe a year or so's worth of, you know, getting that retirement money, right? While things are going down. That's the added little flavor onto it. But in its simplest form, the rehypothecation retirement strategy, right, is just simply, hey, figure out what you need first. What do you need to retire on, or to at least be happy with on a monthly basis? Figure that out, and then there you go. It's as simple as that, man. Like, just kind of figure out what it is that you specifically as an individual wants. Like I said, I only need 5,000. Yeah, yeah, Niles, that's 100%. That's literally it. It's a fancy word for that. And then you simply keep putting, like, rehypothecate into it, right? Take it out, rehypothecate back in, right? It's a constant cycle. When it comes to like yields and LPing and stuff, I call it a money printer, because what does a money printer do? It usually goes in a circle, and then money gets spit out, right? It's as simple as that. And so ultimately, that's what it is. You know, the cycle is a cycle. It's a circle, right? You know, when you're up here, sell. When you're down here, buy. Sell, buy, sell, buy. And it spits out money for you. And you get more and more and more and more. So, secrets of the universe right there.
Hey, Niles, definitely make sure you're subscribed to the channel. Nate's going to be, Nate's in the process of working with Tracker and Jeff right now to put together an LP
Oh
strategy.
yes, that's tomorrow. Tomorrow we're going to be going into deep strategies on the LPing, yielding side and everything. Me and Tracker have been talking. Actually, it was just this morning. Actually, him and I had a private chat, and we're just talking about exactly where it is we want to go. We got exact links, exact strategies on what it is, like how to do things, what to do with it, and different ecosystems and everything. Yeah, it's going to be fire, man. Like. With the funny thing is, Tracker and I were actually more so discussing about like how long are we going to try and keep this? Is it going to be like 4 hours, 5 hours, 3 hours? Like, what are we going to do with that? You know, it's going to be a long time. And we got Jeff, and Jeff is going to be right there in it. He's right along with us, man. Like we're the money printers, man. We love building money printers, and so yeah, we're going to deep dive into it.
Hey, Tracker, I want to bring you back in here. Cassie asked for your specific opinion on crypto versus stocks. I believe you were starting to cut out a little bit when you were providing your answer to that. So hopefully your mic's working well and you can elaborate a little bit more on it.
Yeah, sure. Absolutely. And just saying the concept of,
robot.
Yeah, it's
what now? Still not there?
Nah, it's still not there. You might have to close out, clear your cache, maybe come back. It sounds like it's an internet problem. It was working there for a good one. How
about now? Better now or still choppy?
Now it's not working, buddy.
Go.
All right. Yeah, it's unfortunately it's not working for the time being. Hopefully you can come back in and he can get it refreshed. I'd love to get him to answer that question. He is in the DGen Roundtable community, so Cass, if you need to, just reach out to him, send him a message, see if that's something that he wouldn't mind answering. Yeah, he's in the Telegram, so there you go. That's perfect.
Yeah, you're right, Josh, actually, because that really is true. Like, if for whatever reason your question isn't getting answered or anything, you know, unfortunately in Tracker's case, that's really that's literal tragic. But like, yeah, if you just join our Telegram, we're right there. We're right there to answer any question you got at any time.
I was gonna say, you know, some people skimp out on internet so that in a bear market you got more dry powder.
That's true. That's very true. Absolutely. Okay, so yep, we're pretty much getting to the end of the show. We can take one or maybe two real quick questions if you guys want to fire them into the chat real quick. We'll give it about a minute or two for those questions to come in. So while we're doing that, we'll take two more questions. But while those are coming up, Brendan, if you could hop on and yeah, let everybody know if you got anything you're working on, where they can find you, and yep, plug your socials and all that good stuff.
Yeah, you can find me on Twitter at anonymous_bean, anonymous bean crypto. Honestly, I don't use social media a ton, but I am going to try to start posting more content in Twitter, just to help build the following, build the channel. But, you know, there's a lot of news in crypto this week. So, you know, stay tuned to our shows because we're going to be covering, I think, some news this week as it goes along. Next week, we have the FOMC meeting to see if they're going to raise interest rates or not. And so, you know, we've had a lot of news over this past week, and we're going to have a lot of news over the next week. So keep your ear to the ground. Keep plugged into the DGen Roundtable community. And this is where you're going to yeah, that's a good question. So yeah, well, God, you know, we do have the GOAT here, Tom Brady. You know, classic TB12. I am from Boston originally, so I'm a big sports fan, big Boston sports fan. Don't live there anymore, but Brady's the GOAT. Can't go wrong.
Hopefully we don't lose like half of our subs after the comment. I agree with you. I agree with you.
I mean, it's not even personal opinion. It's just a factual statement at this
No,
point.
it
He
is.
is good. He
It
is
is.
good.
It is 100% true. All right, Nate, go ahead and let them know what you're working on. Give you a chance to highlight the LP insights that you're working on with Tracker,
Yeah.
Jeff. And
Yeah, so we got Jeff. Oh, sorry, I totally interrupted you. I'm so sorry.
oh, don't worry about it. It's all good.
Yeah, so yeah, me, Tracker, and Jeff, like, we're gonna deep dive into exact strategies, ecosystems, and everything when it comes to like LPing, farming, just making money printers. I mean, ultimately, that's what the entire show is going to be about. We already had our first round of insights when it comes to like what is LPing, right? Why would you do it? Why is it important? Blah blah blah, right? You know, is it safe? Is it not? Is it a degen play? Is it not? Right? How to do it properly so it's not degen? Things like that. That is actually up on our channel currently. I would suggest watching that first, just so you kind of understand what's going on, and you don't just blindly follow us in when we're like do this and then take it out every single like week or whatever to move it into this one. Like when we start doing that, like you can go ahead and do that, especially if you're APR chasing. Billy got wrecked on that one. Be very careful with that one. But it does work. It does work. I know Di-Fi Kingdoms had Jade come out, and I did very well on that one. I made a full 2x on it, just APR chasing, right? You got to be careful with it though. So yeah, we're going to be having that. That's tomorrow. Tomorrow, what was the time? Do you remember what time that was, Josh? I am forgetting right now.
So if I recall correctly, it's going to be a recorded session. It's not going to be a live stream session. So it's going to be recorded tomorrow night at 9:00, and then it's going to get edited and all that stuff. So I would assume probably Thursday or Friday is when.
Yeah. So full discretion for everybody. We were arguing back and forth, kind of like, should we do it alive? Should we do it? Well, just recorded. Truthfully, what is going to happen with it, regardless if it is live or not, we are going to be splitting it up anyways into ecosystems. Okay. So that way you're not overly like, what is Velo? You know, what is optimism? You know, what's Phantom? And you're not all confused on everything. So regardless of even if it is live, even if it was not live, right, you are going to be getting the full everything on that, right? So yes, it's going to be a really great show. There's going to be a lot of info. If you want to make a money printer to literally be able to retire you, because this is my goal. This is what I'm doing, right? Tracker is doing it as well. Jeff is running after it. If you want to get retired from crypto, if you want to make a money printer to be able to make you money when you're sleeping, that's the entire point.
Yeah, and to answer your question real quick, Cass, I mean, that's a super common comparison. If Bitcoin is like gold, then is Ethereum similar or like silver? That's a very common comparison. The only caveat to that, I would say, is depending on the success of Ethereum this cycle or next cycle, we could see an event where Ethereum overtakes Bitcoin in market cap. And if that were to happen, that would mean that Ethereum is pretty much the number one at that point. And, then we're kind of going into a black hole at that point. You don't know what to expect. People have their different opinions on what could happen. But ultimately, it hasn't happened before. Bitcoin's led the market since its inception. So we haven't had a market cap challenger to Bitcoin. But that is the only comparison. But yeah, most people say Ethereum would be the silver to, the Bitcoin being the gold. But Brendan, Nate, did you guys want to have a quick comment on that real quick before? Yeah, if you want to pop in real quick.
I don't have anything more to add. It's a good comparison now, but it's also a challenging comparison because crypto's in such its early stages still. Ethereum's still being built out. You're going to see a lot more protocols, come on the platform in the future. So while I do agree that it is a good comparison right now, in the future, as Josh said, it may not be the best comparison, but I think it's a fair thing to say right now.
I have, so Brendan, shout out to you and starting the whole perfect storm theory, right? As of right now, popping in, just in, Robert F. Kennedy. Remember when we were talking about the presidents during that? So Robert F. Kennedy, the guy that I want the most, he announced that he has a plan to back the US dollar with Bitcoin itself, gold, right? And then not only that, but he's also going to exempt Bitcoin from US dollars capital gains tax. So perfect storm. I think there's some big things happening here. And like I said originally in that episode, if we get Kennedy in, he may not like perfectly, obviously he's just making promises like all politicians do, but he is very, very, very bullish on all crypto related things. That automatically means he's going to try and help out. So I just wanted to add that in here because it's literally just popping up now on the news feed.
Yeah, there's that, and DeSantis said that if he became president, he would pretty much put a prohibition on CBDCs. But make sure you guys are liked, subscribed to the channel. Make sure you guys comment on this video. Tune in Sunday. We're probably going to be covering a little bit of that because I mean that certainly is newsworthy. What future presidential nominees. Current presidential nominees are talking about when it comes to the crypto space. So again, make sure you guys like the video, make sure you guys comment, make sure you guys are subscribed. Go down in the description, click on the Telegram channel, join our Telegram if you guys haven't joined the Telegram already. If you guys have any other questions that haven't been answered, hop into that Telegram, throw the question in the Telegram, and one of us will be able to knock it out for you. My name is Josh. You guys can find me on Twitter at Chocolate Taints. This has been a phenomenal show. We appreciate all the live interaction, all the live feedback. You guys are awesome. Make sure you guys are tuned into the channel. We got some good stuff coming up. And as always, make sure Sunday at 8 o'clock Eastern time, you guys are tuned in. Hit that notification bell because we will be live with the full DJ Roundtable for our Sunday show. And saying that, we're going to go ahead and sign off for the evening. You guys have a great one, and we'll see you back here next time. Have a good night.
See everybody. Have a good night.